It's time for your Lowcountry real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good morning. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Thanks for joining me this morning. I'm your host, Brian Beatty, and we are live in the studio this morning. Every once in a while, we come in early on a Saturday morning and love to field your questions. I'm joined this morning by Andrew Muller of Mappus Insurance and Bill Sandvig of Movement Mortgage. So we've got the A-team back together again to answer all your real estate questions, comments, concerns. So let me tell you what I have planned for this show. I'm going to first talk about the market. Last week, if you tuned in, I gave you an idea of what's going on, but I didn't have the numbers yet. Right around the middle of every month, we get statistics that we can share with you that talk about price ranges, price increases, price decreases, what's going on with sales, inventory, all that good stuff. So we're going to talk about that first. A little bit later on in the show, I want to have Andrew give us a fairly significant update on what's going on with flood insurance as it relates to the Lowcountry, because there have been some changes since we've been on live, and I want him to go through that with us. We're going to talk with Bill a little bit later. We're going to talk about just what's going on in the mortgage market right now. Where does he see interest rates going? What are some of the challenges ahead of us? What are some of the opportunities ahead of us? And then lastly, I'm going to talk a little bit about... and I'd love to get your opinion on this if you're listening. What would you prefer? Would you prefer a neighborhood expert, or would you prefer a marketing specialist to market your home for sale? So before we get started, if you have any questions, comments, you want to call in, we're live in the studio. Our number here is 843-556-1250, 556-1250. And if you'd like to reach out to me personally at any point in time, you can give me a call, 843-345-1273. Probably the easiest thing to do is just go to my website, listingsincharleston.com. And on that site, you can search the MLS, take a look at everything I have for sale and have sold, read some testimonials. And if you're thinking about selling your house, click on the Sell Your Home tab, and you can read more about my 59-day home sale guarantee at 4.5% commission. So here we go. Getting into the numbers, which, you know, if you've listened to my show in the past, y'all know that I'm very numbers and data driven. I really like to share with you what's going on in our market and give you the specifics, not just give you opinion. So in Charleston County, let me start there. I think a lot of people are of the opinion that when we talk about price increases and sales increases and inventory and what's going on in our market in general, that it's all led by Charleston County. And for the most part, that's true. But Berkeley County and Dorchester County are very close to Charleston County in terms of what's going on with sales, pricing, so on and so forth. So if I look at the market in Charleston County, let's first talk about new listings. We have only had a 1.8% increase in new listings year to date versus the same time in 2013. However, we've had a 7.2% increase in closed sales. So we are actually selling more property than we are putting on the market. That's why inventory is reducing. It's very simple.
I know you touched on this, but I think 3 weeks ago was the record for the most contracts ever put in 1 week in Charleston, Tri-County area. There's over 400 contracts in 1 week.
We're rocking and rolling right now. I mean, it's a great market. Then let's talk about price. Price is up in Charleston County an average of 10.6%. That's pretty awesome, especially when you consider the year we had last year. Last year was gangbusters for a lot of us, and I was of the opinion, and I still kind of am of the opinion, that this has got to subside at some point. Then things have got to slow down. Otherwise, some of the top agents in town are going to have a heart attack with how busy we've been. But no, it's all great news. And then if you just look at some of the other finer points, like how long is it taking to sell a house? It's taking 82 days on average in Charleston County. And what's the average percentage received from list price? In other words, how much negotiability is there in Charleston County? There's 5% right now. So simple math. If your home is listed for $100,000, plan on it selling for $95,000, assuming everything else remains the same. And again, those are averages. So that's what's going on in Charleston County. Very, very active market right now. On paper, everything looks great. There's nothing really bad to report. Of course, the conservative in me always likes to kind of keep an eye on what's going on 6 months from now. What's going to happen 12 months from now? What do I need to prepare my clients for? And what do I need to prepare my business for so that I'm not caught? And I see some things going on. We're going to talk about it a little bit later on in this program. Some things just to keep in mind, because our market can't continue at this pace for too much longer. Certainly not years at a time of double-digit increases in sales and pricing.
No, of course not. What I'm seeing more and more is people are starting to sell their home when they weren't really planning on selling their home. It's almost I could sell my home, so my value is up. So why not sell my home? Which no one was doing that a couple of years ago. Everyone was holding tight, trying to ride it through. And so now you have these people that are like, well, I wasn't really thinking about moving, but I can.
Right. As an example, neighbors across the street from us, they basically said, hey, we're going to take advantage of the market. And they sold their house. And then they're like, well, I guess we'll have to find a new place to live. They sold it, and they hadn't even started searching for a new home. But that's just showing how aggressive the market is right now.
Yeah.
2 emails this week from a client of almost the exact same tone, and it was, well, I didn't expect it to sell this quick, so we need to find a house fast.
Right. Right. If you're just joining us, feel free to call us. We're live in the studio. The number here is 843-556-1250. We're just talking about the Tri-County market, giving you some numbers and some statistics. I just went through Charleston County. Let's go over to Dorchester County. Again, looking at the same statistics, new listings are actually down 0.5%, and closings are up 2.3%. So we are, in Dorchester County as well, we are selling more property than we are putting on the market. So inventory is reducing. In fact, inventory overall reduced about 6%. And we are looking at year-to-date numbers for 2014 versus the same amount of time in 2013. Pricing was up 7.9%, and average time it takes to sell a property, 72 days. And the average percentage off of the list price is about 4.5%. So things are very, very good in Dorchester County as well. Closings aren't quite as high in terms of a statistical increase compared to Charleston County, but good news. And I'd say good news, especially when you consider the fact that there is such a large inventory of new construction in Dorchester County and Berkeley County. Certainly much more so than Charleston County. Then let's move over to Berkeley County. Berkeley County has seen a 9.5% increase in new listings. Having said that, closed sales are up 18%. That's a big number. 18% is a big number.
That's got to be driven by the new construction.
Yeah. Overall, inventory is down 7%. Pricing, median sales price is up 9.5% from the same amount of time last year. Properties are selling on average in 68 days. By the way, in 2013, for that same amount of time, the average days on market was 83 days. We've cut almost a month off of that process because it's so competitive in that market. And then you can expect to receive 96% of your listing price if you're considering selling in Berkeley County. So those are the stats. Those are the numbers. That's what's going on right now. If you guys have any questions about your area, I have the MLS pulled up, and I'm more than happy to take your call, talk with you about your neighborhood, talk with you about your area, any general knowledge questions about the Charleston market in general. Feel free to give us a call here in the studio, 843-556-1250. So encouraging stuff. I'm also seeing, just as an agent that's very active in this market, that we still have a ton of multiple offer situations. And Bill, I know we're going to talk in just a little bit about what you're seeing from a lending standpoint, and something that you do that's a little bit different than other lenders, which is that you take them through the underwriting process before they make an offer, which I think is awesome. And then, Andrew, I would say from your perspective, what are you seeing right now market-wide just in terms of activity?
So the older properties we're seeing going, the ones that were being forced to move into the higher flood insurance rates, now that subsidized rates are back, we are seeing these older properties, specifically downtown properties, they are selling so fast. And where, again, you just mentioned the multiple offer situation. I have one that I'm working on with the buyer, the one that was fortunate to get their offer accepted on a downtown pre-firm property that was sitting for months and months and months, that I had worked with the selling real estate agent on the flood insurance, and it was just not going to be affordable. But now that the subsidized rates are back, it sold with multiple offers.
Yeah, it's amazing how the timing has worked out as it relates to flood insurance, because, if you've been listening to this program or if you've been following what's going on with flood insurance, it's almost like somebody hit the stop button on properties that had flood insurance issues or properties that were built prior to 1971, which is when Charleston County joined the National Flood Insurance Program. So you look at all the properties that are at Isle of Palms, Sullivan's Island, Folly Beach, a lot of areas in James Island, West Ashley, and of course downtown that are older. Their flood insurance premiums were spiking by thousands or tens of thousands of dollars. Nobody really knew what to do, so people just kind of hit the stop button in that market. So now that we've got some great news about flood insurance being really kind of revamped and reworked, and that whole Bigger Waters Reform Act basically being off the table at this point. I mean, they've kept some things, but they've really softened the blow so that it's not such a catastrophe in our real estate market. Mm-hmm. We're also at that point in time where this is when people buy investment property. This is when people go to Isle of Palms, Sullivan's Island, Folly Beach, and stay there. And then they consider investing in real estate when they realize that, wow, I just spent $3,500 this week staying in this property. Yeah. Maybe I should consider buying one. So you take that, and then, of course, all the downtown stuff. Downtown has been, if you look at the sales downtown and the price increases downtown, the level of activity is so high, it's borderline frightening.
It's amazing the difference from this year to last year. Last year, I remember when I was talking to my realtor partners, it was, people are taking their time, really slowly deciding what property. They're not worried about that property going away. Well, I'm going to think about this one for a while. And now you can't think, because if you think about this for more than 48 hours or 24 hours, that house isn't going to be there.
Right.
And so now the question isn't, hey, are they going to put an offer in? It's, did they get the offer? Did you get it ratified? Which a year ago, that wasn't a question. It was, are they going to make an offer?
Right. All right, well, I'll tell you what, we're going to take a quick break. Again, we're live in the studio. If you want to call us, 843-556-1250. And when we come back, we're going to talk with Bill a little bit more about what's going on in the mortgage market right now. Coming up a little later on, we'll talk with Andrew about the flood insurance market, get some specifics. And then I want to talk with you specifically about which is a better choice for you, a neighborhood specialist or a marketing specialist. So stick around. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA.
More stimulating talk on real estate matters with Brian Beatty next on 1250 WTMA. WTMA. Expert news and views on the Lowcountry real estate scene. The Brian Beatty Real Estate Show on 1250 WTMA.
Good morning. This is the Brian Beatty Real Estate Show. Thank you for joining me. I'm your host, Brian Beatty. We are live in the studio this morning. I am joined by Bill Sandvig of Movement Mortgage and Andrew Muller of Mappus Insurance. So we've got the A-team back together again, ready to field your questions, comments, concerns about the real estate market. The number here in the studio is 843-556-1250. 843-556-1250. If you're just joining us, last segment, we talked a little bit about what's going on in the market right now. I gave you some specific numbers, and let me just give you the very basic summary of what's going on in our Tri-County area right now. Overall, the median sales price is up 9.2%. Inventory is down 5.5%. And overall, the Tri-County area is in a seller's market. So when we look at months of inventory. That's really what we use to gauge the health of a market. And a normal market is 6 to 8 months worth of inventory. Right now, Tri-County wide, for single-family homes, we're at 5.4 months of inventory. And for condos and townhouses, we're at 5.8 months worth of inventory. And I'll tell you, the condo and townhouse market has really taken a huge swing recently because we had a lot of inventory that we needed to burn through, and we've done that. So overall, things in the Tri-County are looking very positive. It's the busiest time of year for buyers and for sellers. So if you're considering buying or selling a home, visit my website. Feel free to connect with me. I am one of the top 1% agents in our market, have been since 2009. My website is listingsincharleston.com, and you can find information about me, my experience, what I have listed for sale, what I've sold. If you're considering selling your house, click on the Sell Your Home tab, and you can learn more about my 59-day home sale guarantee at 4.5% commission. Again, the number here in the studio, if you have questions, if there's anything that we say in the next few minutes that sparks a thought, give us a buzz. 843-556-1250. Bill, I wanted to talk with you this segment about just what you're seeing in the mortgage market right now. So give me just a very general sense of where rates are right now. What's going on with affordability as it relates to getting a mortgage?
Sure. So this week, rates did drop. They dropped all week long to a new 8-month low. So we are at a low point for mortgage rates right now for the year. To put that into numbers, for a government loan, FHA, VA financing, 30-year fixed rate, 3.75%. Great number. We've been talking about as high as 4.25, 4.5 even in the months past. So that puts that affordability factor up, way up. Even though housing prices are improving, rates go down, houses become more affordable. Mm-hmm. The conventional side, conventional lending for qualified borrower, 4.125 for a 30-year fixed. So rates are down, and it is the buying season, and it is a good time to think about getting into a house and getting into a new mortgage.
That's pretty awesome. Why do you think the rates went down?
Rates went down based on some, political news, any news that's in the economy that isn't good. So we had some retail numbers came out this week that were a little bit less than expected. Going into the spring season, there was a real expectation that job numbers were going to be really excellent, and they weren't excellent. They were good. And so little things like that just cause for the bonds to drop, and it caused for rates to go down. So it's a temporary blip. Everyone is still expecting rates to trend up and to continue to trend up. And as we move forward in time, I expect that there's going to be larger increases, and rates are going to keep pushing as the government backs off of their bond buying program, which has been holding down rates. We will see rates go up, but let's enjoy a temporary blip down and save some money.
Yeah, absolutely. Again, if you're considering buying a home, listingsincharleston.com is the website to do that. If you have questions about anything real estate related, we've got, of course, me, the real estate broker. We've got Bill, the mortgage guy, and Andrew, the insurance guy. So any question at all, we should be able to answer it unless it's something legal in nature. We don't have an attorney on staff here. But feel free to give us a call in the studio, 843-556-1250. Bill, how easy is it to get a mortgage right now? I've heard mixed messages about it's really difficult to get a loan right now versus, man, the strings have really kind of loosened up and it's not as hard as it was 2 years ago. Where are we with that right now?
So with lending guidelines, no one wants to slide back to the days of no income, no asset, where everybody was getting a loan and people that shouldn't be getting loans are getting loans. And it led to a very well-documented string of foreclosures and people owning 2, 3, 4 houses that didn't have any business doing that. Mm-hmm. But at the same time, there is money out there to lend. Just the requirements are very, very black and white. And those requirements are driven by Fannie Mae and Freddie Mac, the conventional lending guidelines, also driven by FHA. And the government does not want us to slide into a place where just anyone can get a mortgage. They want people to get mortgages. It's important for the economy. They want banks to lend, but they want them to lend smartly, and they want them to lend intelligently. Now, there's been some news in the past about continuing to tighten lending guidelines. And what causes lending guidelines to tighten is when banks are nervous about loans being bought back. And when a loan is bought back, that means that someone defaults on a mortgage, and the investor, such as Fannie Mae or Freddie Mac, say this loan was not written in accordance to our guidelines, so bank, it is now your responsibility. That is a huge hit to the bottom line of a lender. And when the economy turned back in 2008, 2009, Fannie Mae and Freddie Mac actually opened up entire departments to look at all this bad debt and find mistakes in the lending. And they were selling back these loans to the banks. A small company that doesn't lend on a big footprint, you get a $500,000 loan bought back that goes directly into your profit. That hurts. And that's why there was just company after company closing their doors because they were getting loans bought back. So this fear creeped into the industry, and overlays started to be created by banks that was preventing lending because they did not want those loans to be bought back.
Right.
So overlays are the reason why we can't get a loan anymore, because of these bank overlays, which are tighter restrictions than the Fannie Mae, Freddie Mac guidelines. Well, recently, Mel Watt came out and said, we want lenders to feel confident to lend. It's important to the economy. It's important to our country that money is flowing and people are buying houses. So he has come out and said that he is going to put steps in place for lenders to feel confident that they're not going to be facing undue amounts of buybacks on loans. And so lenders will in turn be able to loosen these overlays. So overlays and the impact on lending from bank to bank are different, but it's important to know that it's a good reason to go to a company like Movement Mortgage, because we're very, very mobile, and we have multiple investors. And so as the investors change, we open the door to more abilities to lend. So we don't have to necessarily go straight to Fannie Mae or Freddie Mac. If you're kind of an outside-the-box person looking to buy a house, we can find a solution for you. We have a better shot at finding a solution. So really short answer to your question is the short answer.
Are you sure?
Yeah. So the short answer to your question is that overlays are going away. There is money to lend, and get in touch with a professional so that you can find out if your situation is lendable, because I'm going to be able to diagnose very quickly if you have an opportunity to lend. Banks want to lend money, and it's not about not lending. It's about documenting the loan properly. It's about verifying accurately that you're in a position to lend.
Gotcha. Again, we're talking with Bill Sandvig of Movement Mortgage. If you have any questions, 843-556-1250 is the number here in the studio. We are taking calls. We are live. Let me tell you my concern with this and with what Mel Watt, which is the director of the Federal Housing Finance Agency, has done, is he's kind of opened the doors back up to allow mortgages to people that are in kind of tough spots. They're kind of in the gray area. In other words, from a lender's perspective, you can look at one set of people and say, yep, these they have great income, minimal debt, no question in my mind that they can get a mortgage. And then you've got some people that are in kind of unique situations where maybe they're self-employed and they have a ton of deductions that they take every year, so their income on paper doesn't look great. Or they have some sort of extenuating circumstance that just makes their loan a little more challenging than the black and white person that has a 9-to-5 that earns the exact same amount of money biweekly. And what it's done, or what it's going to do, in my opinion, is, again, it kind of, rather than closing the gates a little bit, which is, I think, what Fannie Mae and Freddie Mac were trying to do. They were trying to get out of the business of lending. They are now kind of opening their doors back up to say, hey, the economy is in great shape. We want people to feel comfortable in lending again. So we're going to take that gray area and we're just going to shorten it a little bit. We're going to tighten it a little bit so that the people that are kind of on the fence from a lending perspective, we're going to be able to get them to jump over into greener pastures and get a mortgage. And the concern with that, of course, is that if that takes shape and we don't have some strict guidelines in place, or some accountability measures in place, then I think people are just going to take advantage of the system like they did several years ago. Hopefully we never get back to the point where we can just walk into a bank and say, here's how much money I make, and here's how many assets I have, and here's my debt, and just tell it to you rather than you verify it, which is stated income, stated asset, which is what we had several years ago. Hopefully we never get back to that, but I think the idea that we are now lending to people that are in that gray area can be great for some. It can also be trouble for lenders that are kind of putting themselves out there with situations that aren't cut and dry.
Mm-hmm. Yeah.
I see it all the time from an insurance perspective where the lenders come back and they say, we have to get the insurance premium down by $100. And I'm like, really? $100 is going to make or break this deal? And I just, from an insurance perspective, or just from an outside perspective, looking in, not really being involved in that loan process, to me, that's a red flag. Just saying, like, if they can't pay $100, then should they really be qualifying for this loan?
That's a great point. And then think about, too, the fact that let's say something were to happen and they have to pay a premium or they have to pay their deductible. Hopefully they've got reserves to be able to take care of that. Anyways, I want to talk with you more about flood insurance and what's going on in Charleston County, Dorchester County, or Berkeley County. We're talking about redrawing the maps. We've had some great news recently with regard to flood insurance, so I want to talk with you about that next segment. Again, we are live in the studio, 843-556-1250. If you have any real estate-related questions, feel free to give us a call. We're going to take a break. This is the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. We'll be right back.
Have a real estate question? Ask Brian Beatty. Send him an email, lowcountryhomesales@gmail.com. The Brian Beatty Real Estate Show is on 1250 WTMA.
1250 WTMA.
Now, here's more of the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Welcome back. This is the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. Thanks for joining me this morning. I really appreciate you guys tuning in. If this is your first time tuning into the show, I've been one of the top 1% agents in our market since 2009. And the very simple goal on this program is to inform you, the general public, on all things real estate here in the Lowcountry. So I take national, regional, local news and boil that down and apply it to you, the local homeowner, so that when it comes time to buy or sell a home, you've got information so you can make an informed decision. If you'd like to reach out to me, my website is listingsincharleston.com. You can search the MLS, take a look at everything I have for sale and have sold. And if you're considering selling your house, click on the Sell Your Home tab and learn more about my 59-day home sale guarantee at 4.5% commission. We are live in the studio. I am joined by Bill Sandvig of Movement Mortgage and Andrew Muller of Mappus Insurance. And again, we are live. So if you have any real estate-related questions, feel free to give us a call, 843-556-1250, 556-1250. Just a quick recap on what we've already discussed. We talked about the real estate market here in the Tri-County area. And very simply, overall, the prices are up 9.2%, which is huge compared to last year, considering we had such a great year in 2013. Inventory is down 5.5%. And overall, we are in a seller's market. So right now, it's the peak of our selling season. We've got another month or 2 months worth of just rapid fire sales. Everybody is very busy. People are looking, people are buying, people are selling, people are investing. It's a great time, a lot of fun. So if you're considering getting into the market, again, listingsincharleston.com is the way to contact me if you'd like to discuss me working with you as your realtor. Getting into this segment, Andrew, we've had you on the program a bunch. You are an insurance expert, no doubt about it. Give us an update on where we are right now with some of the changes that have occurred in the flood insurance world. It's been a while since we've been live, and there's been some really encouraging information and reform to come out that specifically applies to the Lowcountry in a very big way.
Absolutely. So back on May 1st, the big news was that subsidized flood insurance rates were brought back. And so what that meant was that, at least for Charleston County, homes built before 1974, these rates that were skyrocketing were brought back, and these homes that were sitting there basically unaffordable because of the flood insurance are now selling. So what might have been $7,000, $8,000, $9,000 for flood insurance is back down to anywhere between $1,000 to $3,000. And so that's the big news, is that the subsidized rates are back. Some things coming down the pipeline is that flood insurance remapping will be occurring. And so what this means is that you could be in an X flood zone, which is the lowest hazard flood zone, and you're not required to carry flood insurance by lender standards. You could be remapped into an A zone, and then your lender is going to say, hey, you need flood insurance now. So that's something that is coming down the pipeline. Remapping has always occurred every 10 years or so. So the last time a lot of Charleston County was reassessed was back in 2004. And it's just now that it's on the front burner for many people. It's always occurred, but now people are really focusing on it. The big reason is because they're changing to a digital map style versus before, where it was just loosey-goosey going out and assessing the topography maps just manually, and now they're doing it digitally, and it's becoming more and more precise. So we could see major changes to remapping.
So let me ask you a question. Let's say you're in a flood zone, and it's just a very minimal flood zone, but then you get bumped up into something that is a much higher rate of risk. How does that change implement? In other words, say you're paying $1,500 a year right now for flood insurance, and they come out and they say, sorry, but you're actually going to be in the highest hazard flood zone now, and your rates are expected to go from here to here. Well, is it an immediate change?
No. And the thing is you can be grandfathered in to your current flood zone, current base flood elevation. So that's very important that if you have a flood insurance policy, you keep that policy in place, especially if the flood zone changes. So if you go from an A zone to a V zone, which is the worst zone you can be in, as long as you have that A zone policy in force and it doesn't lapse or get canceled, then you get to be, quote unquote, grandfathered into the A zone. I have a property that I'm working with a buyer right now. If you look at the flood zone that the property currently sits in, it's a V zone. However, the sellers of the property have always had a flood insurance policy, and when they originally purchased the house, it was in an A zone. And so the current sellers are paying $450 roughly for flood insurance. If we were to go get a new policy today, it would have to be rated in a V zone, and the flood insurance premiums were going to be $15,000.
Holy cow.
However, we were able to transfer that policy to the new buyer, and he's only paying the $450 premium that the previous owners were paying. So it's very important to keep that policy in force and to transfer it to the new buyer. So you can always be grandfathered in, but do not let that policy lapse.
So let me ask you a question. Let's say they're paying that $450 right now, but theoretically, if that policy were to lapse, then he would go immediately to $15,000. Does it increase over time, or does it stay at that $450 for as long as that policy is in place?
It's going to stay relatively the same at that $450. Certainly, there will be minor rate increases, just like everything else in the world that we live with. But you're not going to see major increases. You're not going to work up to that $15,000. It's going to stay relatively flat. But again, if that policy lapses, you will be forced to take the new higher zone, and there's no way of going back to that A zone. So it's very important.
I'm going to shameless plug you here. That's a great example of why I love sending my clients to you, because I feel that when I send them to you, you educate them and you do what's best for them no matter what. Whereas I often find when I'm working with other agents that I don't have the opportunity to refer my clients, I feel like the agents are interested in writing that new policy. They're interested in all their advice is geared towards, I'm going to write you a new flood insurance policy, where I have never, ever felt that you do that. You're always about educating, finding the absolute best option for my customers and Brian's customers. And so that I really value that. I just wanted to say thank you.
Well, I appreciate that, Bill.
All right. Well, on that positive note, we're going to take a quick break. When we come back, I want to ask the very simple question. Would you prefer a neighborhood expert or a marketing expert to sell your house? Again, we're live in the studio, 843-556-1250. We're hoping for a call or two and to speak with you. Again, this is the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. We'll be right back.
Find Brian Beatty online at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on the Big Talker, 1250 WTMA. You're listening to the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA and WTMA.com.
Welcome back. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Thanks for joining us this morning. We are live in the studio. If you have any questions, comments, concerns about anything real estate related here in the Lowcountry, feel free to give us a call, 843-556-1250. I am joined in the studio by Bill Sandvig of Movement Mortgage and Andrew Muller of Mappus Insurance. And we'd love to field a call or two, answer any questions y'all might have. If you'd like to reach out to me, anything real estate related you'd like to discuss buying or selling a home, best way to do that is to go to my website, listingsincharleston.com, and take a look at everything I have for sale, everything I've sold, read some testimonials, and then if you're considering selling your house, which is what I want to talk about this segment, click on the Sell Your Home tab, and you can learn more about my 59-day home sale guarantee at 4.5% commission. So just a very quick overview, because we've only got a few minutes left, and sometimes I wish the show was 2 hours, because it always seems like I have more to say, which I suppose is a good thing rather than not having much to say. But overall, just what's going on in our market, sales are up 9.2% this year versus the same time last year. Our market really is doing phenomenally well. A lot of people thought that we'd be slowing down at about this point, and it seems like we're just continuing to build momentum. So very happy with the level of sales. Again, prices are up 9.2%. Inventory continues to be an issue. Inventory right now is harboring right around 5.5 months. So overall, Charleston is in a seller's market. So sellers, congratulations. You've gotten through the worst of it. I no longer have to, for most cases, sit down with you and say, I'm sorry, you have no equity. Let's discuss a short sale, which is what I did for years and years. So great to just have an overall positive market outlook. So love sharing that stuff with you. Again, if you are considering selling your house, just want to know what your home is worth, feel free to connect with me. I'll give you all the market data. And it doesn't matter if you're considering buying or selling now or 12 months from now or 5 years from now. I'm just here to provide you with information so you can make some informed decisions. Before we took a break, I asked a question. If you're going to sell your house right now, what would you prefer? Would you prefer to have a neighborhood expert or a marketing expert? Is it possible to have both? Is it possible to only have one of the two? So that's my question for the last few minutes of this program. If you have an answer, I would love to hear your perspective. 843-556-1250. Andrew, I said that I was going to ask this question toward the beginning of the program, and while we were off air, give me your answer, because I thought it was good.
So if I am selling a house, it's all about marketing. It's all about getting that house exposed to any potential buyer out there. And so you really want a marketing expert. You want somebody who, well, when I think about looking at properties, you instantly go online. You go to all of the real estate websites. You go into Google. So you want somebody who has that exposure on all of these websites. So that's, to me, if you're looking to sell a house, you want that marketing expert. But if you're looking to buy a house, you want to know the details of the specific neighborhoods that you're looking at. What do you have the swimming pool? Do you have a golf course? What are the neighbors like?
Traffic pattern.
Yeah, traffic. Yeah. Mm-hmm. How close are the grocery stores? How close are the restaurants? What what is it going to feel like if we lived here? You want all that data, and I feel like, so in that case, if you're buying, you want that neighborhood expert.
Right. So I, for the most part, agree with you. Certainly from the listing side, I think it is much more important to be a marketing expert than it is to be a neighborhood expert. Because think about that for a second. If you're looking at properties online, does it really matter to you that the listing agent knows a ton about the neighborhood? Probably not. If I'm looking online to buy a house, I want information about that house. I want information about the area, but I'm going to want that for dozens of properties. So think about it this way. And I kind of just, all right, this is kind of funny. Bill, indulge me for a second, if you will. Excuse me, what's the soup du jour? It's the soup of the day.
Soup of the day, yeah.
That sounds good. I'll have that. A little excerpt from Dumb and Dumber.
Yeah.
One of the best movies in the world. When you're a listing agent and you say to the general public that you're the neighborhood expert, it's kind of the same thing. It's almost like, all right, well, that's great, but I'm looking at a few different areas. So, Andrew, going back to your comment, if you're working with an agent and they say that they're a neighborhood expert, and you start really diving deep into this neighborhood, and the buyer ultimately decides, you know what, we like this neighborhood, but we also saw this neighborhood on the other side of Mount Pleasant.
Yeah.
What are you going to say? Oh, well, I'm actually the expert in that neighborhood too. But let's also look at Daniel. Well, I'm the expert in Daniel Island too. So it's almost like I'm the local neighborhood expert until I get called out.
Sure.
And I'm really not. Mm-hmm. So do I tout myself as a neighborhood expert? Well, I'll say this. I can look at information and become an expert in a neighborhood in about an hour.
Well, I think for you specifically, you obviously you represent a lot of buyers, and so you have the exposure of a lot of different neighborhoods. So you have a very, very good idea of each neighborhood. You might not know every little detail, but you can figure that out just by doing some research,
right?
And with the information that you have as a realtor. So I would rather, certainly as a buyer, work with somebody that knows the area in whole, and then let you do the research and dig in on that specific neighborhood once you do hone in on where you want to be.
Right. I guess my point is, if I'm going to sit down with a seller and I'm going to say, all right, here's my marketing plan. I am an expert in marketing, and I take your property, I make it look as professional and as appealing as possible, and then I broadcast it to the world. That's my approach. Mm-hmm. Wherever somebody is looking is where I want to be. I want to look as attractive as possible online, and then I want to increase my chance whenever possible of connecting with online shoppers so I can turn them into potential clients for your house.
Mm-hmm. An expert at taking a house and turning it into a product.
Exactly. Yeah. Versus, well, I know the entire history of this neighborhood, and I know every neighbor that lives here, and I know when people walk their dog. I know when the bus comes to pick up the kids. Is that really that important to a buyer? Yes, but if that's the selling point between being a marketing expert and a neighborhood expert and having a seller hire you to sell your house, I would go with the marketing expert every single time. So again, if you're considering selling your house, go to listingsincharleston.com, click on the Sell Your Home tab, learn more about my 59-day home sale guarantee. Guys, thank you very much for joining me this morning.
Thanks for having us,
We'll be back
Brian.
next week, and we'll replay this show Sunday from 10 to 11. This is the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning from 8 till 9. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273.